Let's move on now with some of the day's top business headlines with Stephen Carroll. Good morning to you, Stephen.
Hi, Catherine.
Now, we've been reporting on Donald Trump's feisty press conference in our main news update. There are also questions about how he's going to manage his business conflicts of interest, potential conflicts of interest with the office of being president.
It was, in fact, supposed to be the main focus of that press conference. Donald Trump says he plans to hand over the running of his business to his two sons, but not sell off his business interests as presidents have done in the past. That decision has come under fire from the head of the US government's ethics agency. Walter Schoeb says Donald Trump's plans don't amount to eliminating conflicts of interests. Brian Quinn has the details.
Handing over the family business to the next generation. That's Donald Trump's plan for avoiding any potential conflicts of interest between his presidency and business concerns. In Trump's estimation, it's more than enough.
My two sons are going to be running the company. They are going to be running it in a very professional manner. They're not going to discuss it with me. Again, I don't have to do this.
In addition, Trump and his lawyer also promised there would be no new international deals for the company during his administration. Any new domestic deals will have to pass an ethics officer appointed by the company. But the government's top ethics monitor says that plan falls far short, calling on the president-elect instead to divest completely from his private businesses.
The president is now entering a world of public service. He's going to be asking his own appointees to make sacrifices. So no, I don't think divestiture is too high a price to pay to be the president of the United States of America.
The president is exempt from most conflict of interest laws, but recent predecessors have generally liquidated their personal assets and moved them to a fund managed by an independent trustee, an arrangement known as a blind trust. But for Trump, soon to be the wealthiest president in U.S. history, that would be no easy task. He has interests in over 500 companies spread over 20 countries, often in the form of real estate, which is not easily liquidated. It may be especially difficult to ignore business interests when the company is so closely tied to the Trump name.
Donald Trump's comments had some knock-on effects on the markets as well. The value of the Mexican peso fell to an all-time low after the president-elect again piled pressure on companies not to build factories in the country. He praised carmaker Ford for scrapping plans for a $1.6 billion plant in Mexico, saying he hoped General Motors would follow suit. In response, the Mexican president, Enrique Peña Nieto, said his government rejected any attempt to intimidate corporate investment decisions.
All right, and there were some movements on the stock markets as well.
Drug companies on Wall Street took a hit after Donald Trump said that his government would push for lower drug prices. That's feeding into trading in Europe today as well. We've got the pharmaceutical sector seeing the biggest falls at the open in Europe, falls across the main markets, as you can see there. Over in Asia, a similar picture. The pharmaceutical sector in Japan also being hit by Donald Trump's comments. The Nikkei in Tokyo finishing the day down 1.2%. There were falls too on the Shanghai Composite and on the Hang Seng in Hong Kong. Moving on with some more of the day's business headlines. The City of London's lobby group appears to have dropped its demand for a so-called financial services passport after the UK leaves the EU. The City UK no longer lists the passport on its priorities for the upcoming Brexit negotiations. It's now hoping for a deal based on equivalence, where countries with equivalent regulations would be allowed trade freely with the EU. Profits at the owner of clothing chain Uniqlo jumped by almost 17% in the past 3 months. Fast retailing's profits were boosted by a stronger Japanese yen. That helped to offset slower sales growth due to an unseasonably warm winter. And sales in the British retailer Marks & Spencer rose for the first time in more than 2 years in the last 3 months of 2016. Like-for-like sales were up 1.3%, boosted by growth in homewares and clothing. In November, M&S announced the closure of 30 stores in the UK and 53 others worldwide in an effort to turn around its struggling clothing business. Shares in the company up 4.5% in London.
All right, just time for one final business news story, and it's tricky times for Amazon, it would seem. In India, the company's got itself into a bit of hot water with the authorities there.
India's foreign minister lashed out at the online retailer over the Indian flag doormats that appeared on its website. On Twitter, Sushma Swaraj called on the High Commission in Canada to take up the issue with the company. She added that India would revoke any visas for Amazon staff and refuse to issue any new ones. In India, desecration of the flag is punishable with fines and imprisonment. Amazon says it's removed the item from sale, but not without being considerably embarrassed in the meantime.
Goodness me. It's not uncommon to see national flag doormats.
There's
is it?
plenty of others on sale on Amazon, but
Yeah.
the Indians took particular issue with this one.
Oh, the British flag gets put onto everything. Mugs, T-shirts, hats, the lot. Thanks very much, Stephen Carroll, our business editor there.